It's going to be a tricky issue. It's right now not a big problem, but it could become one later. And I don't think that we're seeing the inflation is like the unemployment rate. I think that number is being manipulated a little bit. There lies, damn lies, and statistics. And you know, the rate of inflation is a statistic. Now, right now, the idea is it's under control. It's going to be unfunny. For example, one of the things that was raising inflation here this past year was the price of gasoline. You know, at the pump. It went from like $3.25 to $3.90. It's probably going to hit $4 before the end of the year or better. And so it's showing a lot of inflation. But next year, if we carry through and just have $4 just sort of across, then it doesn't measure as being inflated. See, it doesn't measure it being a higher price. So that's the kind of stuff that you have to watch out for. Food and other things the same way. Major business, investment, political decisions, most of them being postponed. What's everybody waiting on? November. Yeah. And the trouble is, what will happen is sometime probably in the late summer, the markets always capitalize about 4 to 6 months ahead of time, whatever they think is going to happen. They'll figure out what they think is going to happen. Not only for the presidential election, but maybe more importantly for the congressional and the Senate. Particularly whether the Senate will go over and become Republican and get Republican control. Because it has different implications for what the policies will be what the programs will be, what the future is going to look like, and who's going to be able to do what to them. And so everybody's kind of just waiting. But it'll probably be first quarter of 2013. It's going to be this time next year before we know whether whoever gets elected in November is now doing something right. Make sense? Because it'll take them 100 days to get in office, do their things, and be able to see and interpret whether or not that's, and then that will have a lot of impact. So we're going to have sluggish growth probably until the first quarter of 2013. Interest rates are going to stay. The Fed has already said they're going to keep interest rates low through the end of 2014. And quite frankly, it's probably going to go further than that if they can do it. You remember that slide I had with the national debt went up and came down? Well, this is not unprecedented. The Fed did the same thing back in 1946. They said, we're going to peg the long-term interest rate at 2.5%. We'll buy all the debt that comes out, all the treasuries, all the national debt, and we'll guarantee 2.5% because what they were doing was putting a cap on the debt service in order to pay off all that World War II debt. And they kept the interest rates at that level for about 15 to 17 years. So there is a precedent for that. And we suspect, and this is just an opinion, we think the Fed is going to do something like that because our national debt has gotten so high again that they're going to have to be able to peg those interest rates to keep them from getting out of whack. That's another economics term. You need to know that in your classes. You're either in whack or out of whack. and it got out of whack, and you're trying to get it back in whack. And so the future of it now, I will also tell you, predicting interest rates is a fool's errand. You can't really do it. But that seems to be, at least right now, what's going to happen with the interest rate. We can't really count on housing to help the general economy, particularly through this year, even though I am predicting, and most everybody's predicting, housing's going to do better this year, nationally, across the board, than it did last year. And last year was a little bit better than 10, but really kind of flat. And by 13 and 14, housing will begin to start picking up. And I'm talking nationally. We're going to pick up in Texas faster than that. Over-leverage and credit dependency remain. I mean, just if you don't believe it, what's holding up the housing market now? Why aren't people buying houses? Well, one of the reasons is you can't get a loan. Right? I mean, despite what the banks and the lenders will tell you. Sorry, but it's true. Limited government, especially state and local, are beginning to run short. School districts are still having to look at their personnel. How schools that were going to be built are not going to be built. Highways that were going to be built are not going to get built because they're running out of their funding and they're running out of resources. And there's a lag. It's about a 2-year lag in the public thing. International economy is still highly uncertain. And of course, what we really have is the malaise of confidence, the lack of positive feeling. It's psychological. And in fact, what I would suggest right now is that I think that a lot of the economists have lost track of. They're still trying to do technical economic modeling to come up with solutions to problems. And our real thing is it's social behavior. It's behavioral economics and not technical economics. It's not structural. It's not the QE1 and QE2 who put the money in the hands of the bank and it gets lent to the business owner. Because the behavior is different. People aren't behaving like we thought. Texas is, though, doing better. Our leading economic indicators have bounced back up. We had a little downturn back at the end of last year. That's that little blip there at the end. It picked back up.